Gentleman's time has expired. With that, we go to the gentleman from Florida, Mr. Ross, for 5 minutes.
Thank you, Mr. Chairman. And Mr. Director, thank you for being here. I come from a state that's surrounded three sides by water, and we are used to a little bit of flooding, and we're used to some windstorms. We're also a donor state to the National Flood Insurance Program. We probably contribute more in terms of premiums than we ever get back in terms of claims. And my concern is that we have created this model that we use the word insurance when in fact what we've created is a relief model, relief being a post-event distribution of dollars in order to try to correct and resolve the damage, as opposed to insurance, which is a pre-event, actuarially assessed, capital-based program. And so now in the NFIP, as we've seen happen in Sandy and what we've seen happen in other areas throughout the country, is that we really have a relief program. And actuarially, I'm concerned that we're not assessing the value of the risk, because the risk is what the risk is. I mean, and you understand this. I mean, if you choose to live next to an ammunition factory, you don't want to light a match. That's the risk of living there. If you choose to live in an area that is under a floodplain, there's a risk there. And so what we've got to do is that we've got to somehow balance a market to make sure that we have capital that will come in and bear that risk at the price that's appropriate. But also we've got to do, from a policymaking point of view, what's necessary to do what we refer to as mitigation. Because if it's going to be a true insurance program, then we've got to realize that the pre-event investment is going to save us on the post-event contribution. In other words, studies have shown that for every $1 in mitigation, you receive a $3 benefit in value when it comes to relief. My question to you is what is going on in terms of mitigation? Anything that you specifically recommend that homeowners can do in terms of trying to mitigate against potential flood problems, whether it be structural improvements, whether it be, waterproofing, abasement, things of that nature? First of all, that risk, if it's borne by the individual homeowner and they're aware of that risk, they're aware of the value of that risk, they have a tendency to want to make sure that they themselves manage that risk and protect that risk. Mitigation is the area. I'd love your comments on that.
So I think it's critically important, whether it's homeowners or small businesses or public infrastructure, that everyone prioritize mitigation, as you said, pre-storm and pre-event, because that's the way you truly buy down risk. You can either reduce risk, you can avoid risk, or you can ignore it. We shouldn't be ignoring it.
I agree.
So in order to mitigate, if I'm a homeowner, I can dry flood-proof, I can elevate, I can look at structures to reduce flood flow into my home. Those are all measures you can take, and frankly, and again, not an option for everyone, but some people can choose to relocate, especially if they're in a floodplain, and those are decisions people have to make.
Has it been your experience when people are incentivized financially to make mitigation improvements that they'll do so?
Sometimes, but there's more than just rational actors involved in this. There's emotion involved. It's as the Congressman said earlier from New Jersey, sometimes people work their whole life and that's their parcel and they're not going to leave it. And so I think it's both.
Well, I agree, but if given that emotional feeling, you would want to have to protect it, and part of that protection is knowing that you've been incentivized to mitigate against it. For example, whether I have a tax-free savings account that I can use solely to put in that waterproof basement or to put up those berms to keep them. Those would be good options, would they not?
I think they would be good options that are worth considering, along with the fact that to the extent that we can help people make good mitigation decisions, that we can help educate people about how they can mitigate their risk and buy it down and how that protects their investment, that's a role all of us can play, including banking industry and others.
The housing industry, the banking industry,
yes.
Everybody. I think that this isn't just solely a government responsibility or task. Let me ask you also, when we did the fix last year to the Biggert Waters bill, we put a provision there, I believe, that would allow for the disclosure or publishing of the science or the actuarial analysis that is being done. Has any of that been disclosed, or has any of it even been requested by anybody on the outside?
I don't know if the disclosures have been done. We'll do the get back for you on that. There are a number of studies going on the actuarial soundness of the NFIP, but the reality of it is this is a subsidized product, and I agree with everything you said prior about this being a hybrid between disaster assistance as a relief program and an insurance program. It is not pure insurance. It is not actuarially sound, and frankly, I don't think it will be. If it were actually sound, the private industry would sell it.
And we should get the privacy industry in there, and if we can let them assess that risk, there's an opportunity for that capital to be there.
Yep, I agree. There is a potential here, especially as we look at reform, at a layered approach. It doesn't just have to be the National Flood Insurance Program. I think there's opportunities out there for reinsurance and other layers so that people can buy down their risk with private product, and that this product is not is really the last line of defense, not the first.
Exactly. The market of last resort. My time is up. Thank you very much.
Thank you, Congressman.